Hello, hello. Uh, okay. Okay. That would work. Alright, okay, it's time. So just the settings, 1 second. Mm, okay, I think everything is ready. Um, mm, mm, mm. Custom settings, London is bias. Start with the bias. Okay, hello. Alright, I'm gonna be starting now. So, what is this strategy about? Supply and demand, okay? First, I'm gonna explain how it works from the bias. And bias, how do you get your bias? And how do you mark your supply and demand? And how do you enter? The cool thing about this strategy is that it's only on one time frame. It's a 3-minute time frame. You never leave the 3-minute time frame. That's it. That's your bias. That's your entry. That's everything. Okay? So, the bias is purely on the market structure. You need to know you need to understand what is the market structure. Is the market structure bullish? Is it bearish? Right? I'm gonna define to you how you can get the market structure, whether it's bullish or bearish. Okay? So since we are only looking on the 3-minute time frame, it works on the 1 minute and the 5 minute. By the way, it works on all time frames, but the 3-minute time frame it's the wait. This looks like a 3-month time frame. It needs to be smaller. 3-minute time frame. Yeah. Okay. So how do you get your bias? Basically, if the structure is bullish like that, okay. So you keep on having break of structure, break of structure, and then break of structure. Then that is your bias. Your bias is bullish, so you will only be looking for demand. Demand is basically you're looking for longs. Supply, you're looking for shorts. Okay. So if you have a break of structure, the overall structure is bullish on the 3-minute time frame. That is your bias, long. How do you change your bias? You need to have, so let's say the price is bullish and then we break structure to the downside here. So that is a change of, so this either could be a change of character or a liquidity sweep to go back up. Okay. So what happened if this scenario appears? We have break of structure, then break of structure, and then we have a break of structure to the downside. You will still be looking for longs because this could be a liquidity sweep only. So you'll still be looking for longs unless the price change the character and then break structure. Then your bias is completely changed back to bearish. Okay, so we have a break of structure, break of structure, break of structure, and then we have a change of character or market structure shift, and then a break of structure. Here you would be looking for shorts, but if only we have this sweep here, then your bias is still bullish. It is because the overall structure is bullish, and that is how you get your bias. I hope that is very clear. So it's purely on market structure. If we are bullish, we keep on breaking structure to the upside, then we look for longs. If we have a liquidity sweep, we wait. Like our bias is still longs unless if there's a break of structure for the bearish. So then our bias is completely changed. All right, so I'm gonna just give an example here on the chart. So here, let's start from here. Okay, here we have accumulation. All right, but the overall structure is bullish. How do you see the break of structure? On any internal swing? It should be, it doesn't matter, any internal swing. For example, that's a swing. All right, we have a change of character here, and then we have a break of structure. That's a break of structure. Then our bias now is bearish. Here the price change character or liquidity sweep. We are still bearish until the price breaks structure to the upside. Then we are back bullish, which it did here. Then our bias is bullish. Again, the price here change the character and then break structure. Our bias is back to bearish. It's very simple market structure thingy. Hello, bro. How are you? Okay. See here you have a change of character. That's a swing, break of structure. We are bullish, and then here the price change character. We are still bullish until we have a break of structure to the downside, which we added here. The first internal swing, which is this one. So here we'll be looking for a bearish entry. Okay. I'm gonna keep on going here. We are still bearish. Price break change the character here. We're still bearish until the price breaks structure to confirm that we are bullish here. So now our bias is completely changed from bearish to bullish, and as you can see, the price is respecting all of this, like all of the theory behind it. So we are bullish now. Bullish. Okay, it's very simple, very straightforward. Hello, bro. How are you? Welcome. And that is how you get your bias through purely market structure. As simple as this. Okay, so that is for the bias. Now, how to mark out your your supply and demand zone. Okay, first of all, you need to understand what is fair value gap. A fair value gap is basically when the price leaves a gap. Let's say here the price has a big displacement and there's a gap in between. That is your fair value gap. Okay, that is your fair value gap. I think you guys all know what is a fair value gap is. Okay, the supply and demand is basically order blocks. It's just the naming. But let's just stick with supply and demand here. Okay, let me just get the box for the. Okay, here. How do we mark out our supply and demand? Let's start off with the demand. Okay, the demand. We need to have. Let me just change this to red. Okay, call it bearish. I think I have it. I already have it. Hopefully, yeah. Okay, perfect. Okay, that is, so now we need to mark the the demand. Okay, demand, that means our bias is bullish. We're aiming for longs. So the last bearish candle, all right, and then we will have a bullish candle leaving behind a fair value gap. Okay, so in this case, wait, let me mark out the wicks. All right, so in this case, we have a fair value gap here. Okay, that is our fair value gap, and then that is our last bearish candle. And notice there's a fair value gap in between. Okay, so how do you mark your supply? Your supply is basically this entire bearish candle from wick to wick, and then you spread it all to the right side. That is your demand. That is your demand zone. The demand zone has to have the last bearish candle has to intersect with a fair value gap. If it doesn't intersect with a fair value gap, it's still a demand zone, but it's a low probability. What do I mean by this? For instance, like this. The price has no gap. Here there's a big wick, so you will mark, let me delete this. You will mark out, let me just put my line here. You mark it out. See the wick of the last bearish candle, it intersected with a wick. It has no fair value gap, so therefore that is not a valid demand zone. Okay, so the demand zone has to have the last bearish candle, it has to intersect with a fair value gap, otherwise it is not a demand zone. That is the rules of the strategy. Okay, so I'm gonna give you an example. Let's say here, okay, we have on a duplicate. Okay, if you guys have any question, please let me know. Let's assume, okay, this is a bullish candle. That is a bullish candle, right? Let's delete this. So we agree that it's on the last bearish candle. Okay, so that is the last bearish candle before the price goes up and leave a fair value gap behind. Is that a valid zone? Yes, it is a valid zone. Then you will mark this entire thing as your demand zone. Why? Because the last bearish candle, you mark the high of the wick, which is this one, and then you spread the line. You see that the price intersects with a fair value gap. There's nothing interrupting the high of the last bearish wick. Let's assume this last bullish candle, it has a longer wick than the bearish candle. Then in this case, that's not a valid demand zone, because if you spread in the line, you will see that the wick interrupted the bearish candle to intersect with the fair value gap. It might sound a bit complicated, but it is very easy. I'm gonna show you an examples on the chart, and then you understand how. Okay, that is how you mark out the demand zone. Same goes with the supply. The supply, the last bullish candle, okay, last bullish candle, and then leaves a fair bearish, leaves a fair value gap behind. Okay, just like that, and that is your supply zone. Okay, that is your supply zone. You will mark out the low of the bullish candle. You will spread it like that. You will see that the price intersects with a fair value gap, unless if the last candle here has a big wick, then that is not a valid supply zone because it does not intersect with any fair value gap. Okay, is that clear, guys? If you have any question, please let me know. That is how you mark the supply and demand. It's basically an order block intersecting with a fair value gap. That's pretty much it. All right, so that will be it. Let me just go back to the chart, and then just mark out all of the supply and demand zone. Okay, we have, yeah, and there is one important, wait, let me just mark them out. I need to mark them out. We have, that is a supply, right? Because the price intersected with the fair value gap. See, that is not a valid demand zone because there is no fair value gap. The price did not intersect with any fair value gap, so that is not a valid demand. Same goes here. That is not a valid supply because the price does not intersect with any fair value gap. So we delete that. Here we do have a valid small supply zone because the price, it intersected with a fair value gap, the small fair value gap. That makes it valid. Okay, here that is not a valid demand zone because yes, there is a fair value gap, but if you mark out the last high of the bearish candle, you only take the last bearish candle. You don't take two bearish candles. This is the last bearish candle. As you can see here, this bullish candle wick, it intersected with the high of the last bearish candle. So that makes it invalid. That's not a valid demand zone. Okay? Moving forward, same here. That's not valid because this wick interrupted this supply to be valid. That is a valid demand zone right there. As you can see, we have a gap here, nothing interrupting it. Valid demand. That's another valid demand zone. That is a supply zone. That is a supply zone. This is not a demand zone because there is no fair value gap in between. That is a demand zone. I'm just going to keep on marking them so that you understand how we draw them. That is a valid supply zone. You mark the entire thing. Why? Because the price intersected with the fair value gap, this wick. This is also a valid demand. Sorry, this is a valid demand zone. That's not valid because the price did not intersect. This is not valid. Oh, actually, it is it? No, it's not because the price did not intersect with this fair value gap. The wick interrupted it for being intercepted. Okay, that is how you basically mark out your supply and demand. But there is one rule though. For your setup to be valid, let's say we have a demand zone here, okay? That is not a demand zone unless the price breaks structure. So you have to, there is a tick list, all right? Okay, is that a valid demand zone? Yes, the price intersected with the last bearish candle intersected with the fair value gap. It's cleared, okay? That is a valid demand zone. There is one more rule. For the demand zone to be fully validated, it has to break structure. So for example, in this case, the price, that's a demand zone, all right? For us to enter, first the demand zone has to break structure, which is here. The price breaks structure. So that is a valid demand zone. Let's see here. Here, that is a demand zone. That demand zone also breaks structure because the price did break structure here. So that's a valid demand zone. This oops, no, sorry. This demand zone, okay, that's a demand zone. It's not valid for us yet until the price breaks structure here. So if the price, ignore all of the PA here, okay? Ignore everything, okay? That's what you see here until here, okay? Wait, I want to remove this. Okay, yeah. So ignore all of this price action from here. Ignore all of that price action. Okay, ignore everything here. So now this is a valid demand zone because there's a fair value gap intercepted, but we need to wait for us to enter on the retest. We need to wait for the price to break structure, which it did here. So now we did break structure. Then if we retest the demand zone, we will be looking for entry. But if the price created this demand zone and did not break structure and then retest it, that's not a valid zone for us. Is that clear? You might think it's a bit complicated, but with more practice, you will understand. Once I start backtesting, you will understand how it works. Okay, so let's see here. That's a supply. No, it's not. This one. Ooh, what is this? Yeah, this one is a supply zone. Did the supply zone break structure? Yes, it did. That's a swing. Break structure, that's a valid supply zone. But the price did not retest it for us to have our entry. That is a supply zone. When did the price validated it? When it breaks structure here. Okay. That's pretty much it. How you validate your supply and demand zone. How do you draw them? You need to make sure that the price breaks structure. And yeah, that's pretty much it. Now for the entry, how do we enter? Let's say we have our demand zone here. Okay, the price retested that zone. All right. So when the price retests the zone, your entry is gonna be on the last candle that retested the zone. So let's say the price, that's a bullish, that's a demand setup. The price retested the zone, right? Your entry is gonna be the break of candle. The next candle has to break this high of the candle. So you're gonna be placing a stop order here for the next candle to execute your order. That is your entry. So you're gonna place a stop order here. Your stop is gonna be at the end of the zone. Okay, and you target 1-to-1. It's only 1-to-1 strategy. All right. The price retest the zone. You wait for the next candle to break the last retest here. Okay. Let's say, for example, this candle retest the zone but failed to break this high. It did not break this high. Your stop order wasn't executed. Then your order will be on this high instead of this high. It keeps on changing until it executes the last high. Okay, let's say for instance this candle also failed to break this candle's high. Then you'll be waiting for the fourth candle to break the high, which is this here. You'll be placing a stop order. Your stop is at the end of the zone, targeting 1-to-1. Okay, and same goes with the supply, with the bearish setup. Okay, so for the bearish setup, price retest the zone. We're gonna be placing our order here. That's a stop order. We need to wait for the second candle to breach that order. That is your entry right there. Your stop is at the end of the demand zone. Okay. If this candle failed to break this low, then we'll be waiting for the next candle to break this low of the candle. You forget the first candle, you look for the second candle, etc., etc. That is basically all of the strategy. I know it's a bit overwhelming maybe, but you could review, like, ask me any questions if you don't understand anything, or just go over the video again and then it's actually very straightforward. Okay, so this strategy has a very it works very well on pound USD. It is the so far the best pair on forex. Pound USD also works on gold, but gold it's very volatile for having a very tight stop, right? Because your stop sometimes is very tight. For a gold, like for you to trade gold, it's a bit risky and dangerous. So pound USD is the best. I tried Euro USD. It's not really good. It doesn't really work well at Euro. Pound USD is a sweet spot because Euro USD has a lot of wicks, so you will find difficulties finding a supply and demand zone. Okay. So we will only be trading London session. The trading hours is from 2 a.m. until 5 a.m. New York time, though. New York time. When I talk anything about trading, it's only about New York time. UTC -4 here. New York time. So that is your window to look for a setup. Okay. So let's start. That will be it, though. That will be it. Next London session. Okay, so now, oh wait, I need to be on the 3-minute time frame. Okay, that's a 3-minute time frame. So what is our bias now? We are so far bullish. We have a lot of break of structure. We are bullish. The price did sweep here, so we are still bullish unless the price breaks structure here. Okay, like now our buys switch from bullish to bearish. Okay, bullish to bearish because we did break structure here, and then that's a change of character, right? That's a change of character, and then that's a break of structure. Okay, and there's something very interesting here happened, is that, so that is our first supply zone, right? Because this is the last bullish candle, intersects with a fair value gap, correct? And it breaks structure, so this is a valid supply zone for us to have an entry if the price retested. The price did not retest it though, not yet. It only retested the fair value gap. So we will wait. Price did not retest it. It left without us. There is no other supply zone. We do have here a supply zone, and the price breaks structure on this swing. So if we retest here, which we did by a tick. Did we retest? Yeah, we did retest. So we will have a stop order here. Our stop is at the end of the zone, targeting 1-to-1 only. You place a stop order. I'm gonna be risking the same thing, 0.5% out of a 50k account. Okay, so there's something interesting here happened. Look, the price did not engage on this stop order. Then our entry changed from here to here because the price did retest the zone but failed to break this candle's low. Then our entry is gonna be on this low if the price wants to break that candle's low. Okay, so our entry is gonna be here, targeting 1-to-1. And TP hit. Okay, that is as simple as, very simple. TP hit, clean, we go to the next day. If you guys have any question, please ask me. Okay, so the overall structure is bearish, and yeah, there's one important note. You only look for a supply or demand zone during the London session. You do not look any supply or demand zone, let's say from the from the Tokyo session. No, you ignore all of the price action from here. You only take the bias, the market structure from here. Do not take the demand and supply zone from like before the London session. Okay, we only take during the London volatility session. Okay, so now our bias is bearish, but we have no supply zone because this invalidates it. There is a gap, yes, but this wick invalidates this, like the supply zone, because it intersected from through the wick. Okay. Okay, the price breaks structure and leaves a supply zone. Okay, the price did retest that zone. All right, we're gonna place a stop order here, and then our stop is at the low. The price did not breach that low, then we change our stop order to here. That's a 1-to-1 and TP hit. Easy, very clear, very straightforward. I actually love this strategy. It's very straightforward, so nice, so simple. You need to like keep on practicing until you see like how it works, but it's very easy. 1-to-1 high win rate for sure. Okay, our overall structure is bearish. Now the price breaks a change character, or maybe a liquidity sweep. We don't know yet. We need to wait. Okay, so now the price change character. Now it breaks structure. So now our bias is bullish. We need to look for demand only. There is no demand zone yet. There is no valid demand zone. The price change character. Now we still look for long unless the price breaks structure. So we are still bullish. There's no zone yet to be formed. Okay, now it's 5 a.m. so we had no entry this session. There's no valid demand zone. We do not enter. We go to the next day. Everything clear? Okay. The price is bullish because we changed character. We did break structure. Alright, now we change character. We did not break structure yet, so we are still, our bias is still bullish. Actually, no, never mind. The price change character here and then break structure. So we are bearish actually. So we have this supply zone right there if the price retested. See, okay, that I'm so glad this thing happened. So we do have a valid supply zone here, but we don't take it. Why? Because the price did not break structure. The price did not break structure, so we don't take this supply zone. We take this supply zone right there if the price retested, obviously, which it did right here. Okay, I place stop order here. Let's see if the price, okay, the price did actually breach it. So when do you stop using this zone? All right, like our invalidation if the price taps in, if the price retested the zone and then it wicked out of the zone or closed above the zone. That's where you don't take the zone anymore. You don't take the setup anymore. Okay, let's say this wick, it closed, it breached the zone, or or this candle closed above the zone. Then that's before giving you a setup. Then that's not a valid zone anymore. So here, that's a 1-to-1. Stop loss at the end of the zone. Stop order here, and then TP hit. Okay, 1-to-1. Very clean, very. So as you see here, the price changed character, but it did not break structure. It did break structure here after we got our entry. So our entry is lit, like our exit was so clean, as you notice. We tap in the zone, we gave us an entry, boom, 1-to-1 hit, and then it just fully reversed. Okay, so far we have no lose yet. This strategy works very well on London session. On New York, not too much, because on New York, on Forex Pairs has a lot of news there, a lot. Okay, so the overall structure is bullish. Okay, we have a change of character here. No valid zone. Okay, we do have this zone valid. There's demand zone right there. Price break structure. We need to wait for the retest. The price retested that zone. Then our entry is here. Place a stop order here. See, okay, the price failed to break that high, and then it invalidated our zone by breaching the zone. So that's no longer a valid zone. So now the price, it changed character and then break structure. Now we are looking for bearish supply zone. That is our last bullish candle before the drop. That is our valid supply zone. Why? Because you mark the low of the bullish candle, you spread it to the right, it intersected with the fair value gap. This wick did not interrupt, so that's a valid supply zone. Okay, we have, okay, no, that's not, okay, now that's another supply zone. Price break structure makes it valid. And we don't have any entry that day because now it's 5 a.m. Okay, we go to the next day. Ooh, what the hell is this? So some sort of news. So the price has no clear structure because it consolidated. Okay, now we break structure to the upside. Change of character. We have a break of structure now. So now this, our bias is bullish, and this is is it? No, it's not. It's not a valid setup because these two highs are at the same level. How can you know if these two highs are at the same level? Hover your mouse on the candle and then look on the top left hand side. You will see H, which is the high, L is the low. At this bearish candle, the H is 1.21998, the high is 1.21998, so it's the same. So that's not valid. Okay. Okay, that is, so the price, that is a valid demand zone, right? Valid demand zone. Price break structure. We did now retest the zone. We place our stop order right there, targeting 1-to-1, and that is our first stop. Okay, we got stopped out on the session. We change character here. We change character again. We have no clear. See, when it accumulates, it becomes really annoying. Okay, now the price. Now we look for bearish entry. Price change character here to the break structure, and we do have a valid supply zone right there. The price retested. Let's see if it breaks that level. It failed to break that low. Then our stop order is gonna be here at this low, going for 1-to-1, and TP hit. Okay, the price executed our order, 1-to-1R. Very straightforward strategy, to be honest. In terms of bias, you need to practice on the market structure more, and then like you need to follow the data live, right? Like follow the first internal swing in front of you in order for you to to understand the market structure. There is I'm not sure if there is an indicator on FX replay, but there is on TradingView. I'm gonna show it to you now. Look here. That's a TradingView. It is I think, you know, for the indicators, it's smart money something. Yeah, this one, smart money concept SMC Lux Algo. That is the indicator. Don't really rely on it. Okay, it just shows you all of the like how the structure works. You could remove this noise like this. I don't know what is this noise. Yeah, that's the order blocks. Just remove the order blocks. Okay, so here, price change, well, we are bearish, right? That's a boss, and then price change character, and then break structure. So your bias is completely changed from bearish to bullish. It's like it's 80% accurate, right? So that's a boss. It did not mark out because it's obvious, right? And then here we have the first change of character. Actually, it should be this, but yeah, it doesn't matter. That's a change of character, and then that's a break of structure. So your bias is changed from bullish to bearish. Another break of structure, and then we have a change of character here, and then break of structure here. Okay, this is a very, very useful indicator. If you're a bit weak on the structure, you can practice using this indicator right there. Smart money concept SMC Lux Algo. Okay, let's go back to FX replay. London session. Ooh. Price. Okay, so our bias now is bearish. Change of character, break of structure. Let me check if it has it actually. Smart. No. SMC. No, it doesn't have it. Okay, so we have a supply zone right there. It did break structure, and we are bearish now. Change of character, break of structure, and another break of structure. Did the price retest it? Nah, it did not. Do not FOMO, huh? Yeah, don't FOMO. Look, it barely retest the zone. Don't you FOMO. That's where the FOMO plays in. That's where the psychology kicks in. You would just FOMO here. Well, it might have worked, but if it did not work, went against your favor, you'll be like, oh, I should have followed the rules. It's literally by a tick. So it did not retest yet. Nope. Now it did retest, and it invalidated our zone because it actually, wait, I wrote the zone wrong. Yeah, it's still invalidated because it breached the zone. So now our bias changed from bearish to bullish because we have a change of character here and a break of structure there. Okay, so and we have our demand zone right there waiting for us. We have another demand zone here. The price retested and gave us an entry. That's our entry right there. Stop order. Stop order here. Your stop at the end of the zone. 1 to 1. Come on. Yeah, TP hit. Very good. The price used that demand zone as a support. Watch how it respected, like literally 4 or 5 times. Okay, Go to the next day. Our overall structure is bullish. Bit of consolidation here. So we do have yeah, we are bullish. That is our demand zone. Oops, that's our demand zone. The price retested that zone. That was our original entry, but the price failed to breach this candle. Then our entry changed here. That's what I mean when they, like when I say the stop loss is very tight, like that. Let's see. Okay, the price did not give us an entry and invalidated our zone because it breached the zone. So we don't look. We need to wait for another demand to mark it out. Okay, now we have a change of character and break of structure. Okay, now we are looking for bearish. We are looking for a supply zone, which we don't have any yet. Okay, that is our first supply zone. Price break structure. So if, ooh, damn, that's a clean retest. We licked our zone. See, you put your stop order here, your stop is there, you go for 1-to-1. Oh, and a clean trade. Very clean. Super clean. Notice if you miss this setup, let's say you for some reason you did miss this setup, the price gave you another supply zone right there. It did break structure and then it retested here. That's your entry, that is your stop, and then another TP hit. Like you're seeing the pattern. It's super clean. TP here, TP there. There's another supply here. Let's see if the price retested. No, it didn't. Okay. Anyways, so we had the two clean setup here. If you for some reason you missed that setup, you have another setup here. Okay. Okay, now we did change character. We did break structure, but we don't have any supply zone. I mean demand zone. We changed character now, and no, we did not break structure yet. Now we did break structure, okay? And that is our supply zone. Okay. Oh, clean retest. Stop order here. Stop is here. 1-to-1. And that is our entry. TP hit. Very clean. Okay. Change of character. You'd have a break of structure, small break of structure here. The price leaves a supply zone. It validates our fair value gap here. Very clean. Price retested with a rejection. Stop order, stop at the end of the zone. 1-to-1. Clean. Wednesday. Price change character. So our bias is bearish here, right? So we are looking for supply zone, but we don't have any yet. Okay, so now, okay, the price change character here, and it did break structure here. So we're looking for demand, but we don't have any demand zone yet. Nothing yet. That's not valid because this wick, it intersected. There's a gap, but this wick makes our demand zone invalid. This is a valid demand zone. Why? Because the price breaks structure here. This is swing. That is our zone. The price retested the zone with a wick. Stop order. 1-to-1. Look how clean this is. Look how clean this is. It is so clean. Price retested the demand zone with a beautiful clean rejection. Stop order here. Stop loss, actually it's here. Yeah, it's still 1-to-1. Stop loss at the end of the zone. Our entry engaged. Boom, TP hit. Okay. Okay, our bias is bearish. Okay, we do have a supply zone here. Oh, the price retested that supply, but it's so far away to our entry here. So our entry shifted from here to here. See, we failed to break below this low, so our entry now is here. Come on. The price failed to enter here, so our entry shifted to here, which we entered now. See, this is like, this rule saves you from entering early. Nope, TP hit. Beautiful. The bias is bearish. That is our supply zone. Price break structure and then retested the zone. We have our entry right there. Okay. We have one more week. We have, okay, so our bias is bearish now. Change of character, break of structure. We have this valid supply zone, as you can see. Price retested, so our entry should be at the stop order here, which we did enter. Okay, stop order here, stop at the end of the zone, 1-to-1, boom, and stop loss hit. Here we have, I think so far, 2 stop losses. London session. Okay, our bias is bearish. That is not a valid supply zone because there is a gap, but this candle, it intersected with this wick, so this makes this zone invalid. Okay. Okay, that is a valid supply zone. It's a bit big. Price break structure. Fair value gap intersected. It's a valid supply zone for us if the price retested, which it did here. It did retest here, but the price did not give us an entry here, so our entry shifted to this low. It failed to enter here, then our entry is going to be on this low. It failed to enter, then we saved. Like, we are saved now. We did not enter. This zone is not valid anymore. Price change character and then break structure. So now our bias is bullish and we have a demand zone ready for us here. That is our last bearish candle. Look at the high intersected with the fair value gap. Well, actually that's not a fair value gap yet. Sorry, my bad. See, now this I thought that there's a fair value gap here. So that's not that is a demand zone, but not valid because there's no fair value gap. So we do not enter here. Is this a gap? Yes, but this is not valid. Actually, wait, hold up. Yeah, it's not valid. The price left without us. It's 5 a.m. now, so we have no entry that day. 28 January, okay. Still we have no clear structure. Now we have change of character and then break of structure. We have also a supply zone waiting for us. We did retest that zone. We have a stop order here. 1-to-1. Price failed to enter on this low, then we increase our stop order here. We make sure it's 1-to-1. Okay, that is a stop loss. Next day, 3 more days, and then we are done for this month. No clear structure here. It is bullish, overall bullish. We have change of character, and then a break of structure, and we have a supply here ready. That's a supply. Fair value gap, price break structure. Okay. Price retested that. Then our entry should be on this low. Price failed to reach this low to break the candle. Now our entry should be here. The price failed to break this candle. Our entry should be here. Now that's our entry right there. One to one. Boom, TP hit. Clean. Very clean. I want to see the win rate though so far. Like this strategy has a very high frequency, so I trade 1 trade a day. I think maximum you would get per session two setups. 2 setups. So we are bearish. We do not have any supply zone. We have change of character now, and then a break of structure with no demand zone behind. We do have a demand zone here though, but the price did not break structure, so it's not valid yet. See, like we just saved our asses here. That is a demand zone, but the price did not break structure here. Like there is no swing here that breaks that structure. You know what I mean? So that's not valid. Technically we could have entered here and then we get stopped instantly. Okay, change of character. Alright, so the price change character here and then break structure here. So now we are switching from bullish to bearish, and we have our supply zone right there. Price clean rejection, retest it here. Stop order 1-to-1 and TP hit. Very lovely. I think so far 3 losses or 2 losses, I'm not sure. Last trade of the day and for end of the month. Okay, so we do have, so now we are, the overall structure is bullish, and that is our first demand zone. That is the last bearish candle, intersected with the fair value gap. It breaks structure, retested here, so our entry should be here. Price failed to break that candle. Maybe it might break this candle. Yep, that's your entry. Very fishy entry. That's a big stop now. Not a big fan of it, but whatever. And we got stopped. Okay. And that will be it for January. That will be it for today's session. Let me just go the analytics section. See what do you think, guys? So far, okay, 73% win rate, 15 trades, 11 wins, 4 losses. That's not bad at all. We ended the month 3.69%, 69%. Risking 0.5%. I should have risked 1% to be honest, because the Forex prop firms has a bigger drawdown, but it doesn't matter. And just multiply that by 2. And that is so 4 losses. That is the strategy so far. In January, if you actually followed the rules, you could have made on a 50k account $1,800, which is very good. That is impressive. That's only risking 0.5%. If you risk 1%, then that's basically double of that. It might be a bit complicated strategy now because you need to understand the structure very well. It's very heavily based on the structure. That is your bias. You need to understand the internal swings, the external swings, and everything. So I showed you the indicator here. So you could try and tape read the structure using this indicator in order to practice your eyes. And then, yeah, that will be it. I hope you guys enjoyed today's session. If you have any question, please let me know before we end the session. Very clean, clean. So far, I like the results so far. It's interesting. All good? I'm gonna assume all good. Okay. You guys have a good day. I'll see you next week. Peace out. And then good luck this week, guys. Good luck. What do we have, by the way? What do we have on Forex Factory this week? Oh no. Nothing Monday. PMI Tuesday. Okay. Fed Powell. I hate this guy, man. When he speaks, he makes the day very, very choppy. Wednesday nothing. Unemployment claims Thursday. Okay. Decent week. Hopefully we'll get a lot of volatility from the pre-market news. Right. You have a good